Hey guys, welcome back. Well, we did it. We've got 3 days in a row of strong growth across the memory sector, across the Fab Five, the memory titans we see in this channel. Today was a strong day again for the sector. Are we ready to say we're back? I'm not sure yet. I'm still a bit cautious, especially after all the volatility that we've seen over the last few weeks, but it sure felt great to have another strong day. It felt great for the memory sector to be affirmed today like we saw. It was another nice step towards getting back towards the bull run that we saw before all of this craziness that we've been facing, the volatility for a couple weeks before today, before the last few days overall. So we're going to take a look at all of those stories today because actually the market was pretty interesting. While the memory and the storage sector were accelerating, on the other side of the coin, we are seeing macro headwinds start to impact the sector, start to impact the market again, particularly the tech sector. We're seeing right now that Wall Street is closely evaluating every dollar that is going into the AI build out. And those macro headwinds that I'm going to address in this video are not helping right now. They're starting to ramp up some fear and anxiety across the entire market again. The fear of interest rate hikes are ramping up again right now. But we're going to break it all down in today's framework. We're going to go through the same kind of green, yellow, red market signal framework that we've done in the past few videos. But the one thing that is a clear takeaway from today is that 3 of the largest technology companies in Intel, AMD, and Tesla all independently confirmed the same thing, that memory has become the bottleneck of AI. So we're going to examine Intel's blowout earnings that they dropped on the street today after the close. We're going to take a look at the new transformative memory, the roadmap that AMD is laying out right now at their key event that they have happening this week. And then finally, we're going to take a look at Tesla's push to lock down a multi-year supply with Micron, mounting physical and financial friction that may potentially start to hold back some of the data center build out. So that's everything I want to get into. Lots to cover today. So let's jump right into it. But if you haven't done it yet, you guys know what I'm going to ask for. I'm going to ask you to like this video and subscribe to the channel if you haven't yet. Let's keep growing this subscriber base together. It's been an awesome experience engaging with each and every one of you. So let's keep it going. All right, let's jump over and take a look at what we saw today. We'll start with Micron right out of the gates. And as I mentioned, Micron was up about 3% today. Oh, just over $28 a share, closed at $9.88. Here's the thing I want you to look across to the right. The intraday high, we breached 1,000 again. So we broke through. I know you're going to say, we've already done this, Kevin. We've been at 1,200, 1,255. But we have to just, like I've said in a few comments, we got to celebrate the journey right now as we're stepping back towards that all-time high with Micron. We're breaking 1,000 again. We're breaking through that psychological level. I'm going to show you in the candle chart how it pulled back afterwards, but this was a nice sign today for Micron. In the after hours, we're seeing a little bit of pullback, under 1% right now. So I'm not necessarily concerned about that. We're down about $8, although I do think tomorrow will be a bit of a profit-taking day as we head off into the weekend. So I wouldn't be surprised if we have a down day for Micron tomorrow, even with all of the massive stories, the big catalyst moves for the sector. I think we will walk away from the week, even with a little bit of down day tomorrow. If that happens, it'll be a successful week. Because right now, the 1 week change for Micron is 16%. And I'll take that every single week of the year. All right, let's take a look at their peers. SanDisk was up just over 0.5% today, pulling back in the after hours about the same level. So it's essentially flat. Western Digital was up 0.3, again, essentially flat, pulling back in the same in the after hours right now. And Seagate down the bottom, it's very similar. You know, it was up about a little over $5. Right now in the after hours, it's pulling back essentially about the same, $5. And if I scroll down, to SK Hynix ADR, you'll see SK Hynix was up a little over 2.5%, not pulling back as much in the after hours. This is about $2 back in the after hours. So still net positive across the day if we compare the regular trading to the after hours. Let's jump over and take a look at the candle chart real fast for Micron. You can see kind of where we gapped up right from the get-go and just had this nice kind of sideways consolidation, nothing major, no major swings back and forth. We did ramp up and got to the all-time high right here. Not all-time high, excuse me. The high for the day and the high for the last week, breaching 1,000 again. And so once we hit that level, we started to feel some pressure. I think we probably started to see some profit taking as well. Once it crossed over that, could have been some algorithmic selling. It just could have been some anxious hands that sold off Micron, but had a nice candle to finish off the day. Low volume across the trading session, not only today, yesterday was a low volume day as well. I'll get into to show you that. But again, like I said yesterday, that RSI is just sitting perfectly neutral. I still believe it is really just coiled, ready to go. If we have a down day tomorrow with Micron, it's just going to get into a more of a coiled position, even more of a kind of an aggressive position, ready to explode on any sign of a positive news for the sector, any catalyst overall. So let's jump into another green signal, which is clearly the Intel earnings. Just going to cover a few things that are really specific for memory, but you can see the executive summary. A couple things that jump out to me is the second bullet point here, where they're going to increase their investments to capture growth. Everything related to AI-driven opportunities in the x86, the purpose-built ASICs that they have, advanced packaging, the wafer foundry, and then also the last one here, which is the unprecedented demand that they're seeing right now for AI compute. So their data center AI had record growth, the emerging edge in physical AI, the ASIC, the momentum and the expansion. Let's jump over and take a look at what they did see for the data center AI. 56% growth year over year. So this stream of revenue for Intel hit $6.3 billion on the quarter. You can see their operating margin has jumped from 30 to essentially 39, and the operating income overall jumped from 1.5 to 2.5 billion. So really strong. It set a record for year over year growth. There's additional long-term agreements that have been secured, and as Intel said, it's purpose-built silicon revenue. It nearly tripled year over year. There were a few other things from the comments that I wanted to call out that, in my opinion, they were bullish. Obviously, they beat earnings per share as well. They beat their revenue that they put on the street. Their guidance for their next quarter was strong. But a few things that Louboutin said during his comments was that he expects flat PC sales heading into the next quarter. And it's strictly because of the persistent memory shortage that we're seeing in the market. So again, a signal to us that memory continues to have pricing power. And again, demand is outstripping the supply that we see in the market. He also mentioned that to keep pace with the infrastructure demands of agentic AI, that Intel is going to dramatically raise its 2026 CapEx target beyond $20 billion, with 2027 projected to be significantly higher. Management specifically stated they are using this capital to secure substrate and memory supply. So that's another good sign for Micron and all of the memory players, all of the Fab Five. As that was happening, at the same time, I'm going to pull over an article from Tom's Hardware because I think it highlights all three of them. As I mentioned, AMD this week has an Advancing AI 2026 event. If you want to jump on and hear Dr. Lisa Su's comments on this, it's on YouTube. Her keynote presentation, I would encourage you to listen. It's actually really cool. But this is their event that they put on. Think about NVIDIA's GTC. This is AMD's kind of comparable event, Advancing AI. So they went through three products that Tom Hardware has highlighted here on the screen. So I'm not going to jump into every one, but I wanted to just give you a highlight that we see their EPYC, 9996 Venice overall. They also have the MI455X, the AI accelerator, and then you can see the Venice X CPU down on the bottom. I want to just talk a little bit about each one and why they're bullish for memory and why I feel like this is a green signal overall. If we start at the top, the EPYC 99996, we'll call it. This one is AMD's 256 core, 512 thread flagship processor that is based on the 6th generation Zen 6 architecture. So this is bullish for memory, guys, because it expands host CPU memory channels from 12 channels to 16 channels per socket. So more memory channels mean data center operators, they must populate more DIMM slots per motherboard. This is driving, according to the article, a 33% direct increase in DDR5 module density per server. It's a great sign for Micron as a key supplier of DDR5 memory. If we jump down to the lower left, you have the accelerator there, the MI455X. So this is their flagship. This is their CDNA, their CDNA 5, their AI GPU. This is the one that is going to essentially compete with NVIDIA's Vera Rubin, their NVL72. So they're going to build, AMD is going to build a 72 GPU Helios rack scale system, directly trying to compete with NVIDIA's system. And why this is bullish for memory overall is this is a massive HBM4 density. So this MI455X, it features 12 stacks of HBM4 memory per GPU. It's delivering a massive 432 gigabytes of HBM4 capacity and up to 3.3 terabytes of bandwidth per chip. This exceeds the HBM footprint of competing accelerators, and it's creating a huge structural demand sink for high bandwidth memory in the market. This will be not only a bullish sign for Micron, Samsung, and SK Hynix. We know that Samsung has a partnership. They're the key supplier for AMD. This massive amount of HBM is going to be needed. Samsung's going to provide it, and it's just going to open up tremendous opportunities for Micron and SK Hynix to fill the need across the rest of the market, particularly related to HBM4. This is a great sign for all three companies, a great sign for the memory sector overall. And the last one on the bottom right, their Venice X CPU. So this is it's a specialized variation of their Zen 6 server lineup. It's going to launch in the second half of next year. It features 96 high-frequency cores, and it's combined with a immense 1,152 megabytes of stacked 3D V cache. So essentially, this is going to leverage into more of CXL and memory pooling, more so than we've seen with the last one, which is going to be high bandwidth memory. Here they're going to leverage the CXL, the 3.1, and the PCIe Gen 6 lanes to support external memory expansion bones. This will allow data centers to attach hundreds of additional gigabits of external DRAM directly to the CPU. It's going to create a secondary growth market for CXL memory controllers and expansion modules. This is a great sign also for Micron. So guys, with all these new architectures that we're seeing with AMD and NVIDIA, plus we're seeing these multi-gigawatt deployment commitments from hyperscalers like OpenAI, Meta, Anthropic, it confirms that hardware buyers are aggressively scaling physical memory infrastructure to prevent memory bottlenecks in the agentic AI workloads. It is a huge sign. So for players like Micron, SK Hynix, Samsung, these announcements, they just cement a durable multi-year demand supercycle. It's proving that regardless of which chip maker leads in the raw GPU teraflops, every incremental advancement in AI compute requires exponentially higher allocations of premium DRAM and HBM. So great sign for today. And I want to jump over for the last piece on the green signal. It's not really a signal, but I just want to give you a heads up on some of the volatility we could see tomorrow with Micron. If you take a look at the options overview here on the screen, a few things I want to call out is even though we had a 3% growth today with Micron, just under a 3%, you can see if you look in the top of the right column over here, the put to call volume ratio, it's at a 1.1. And if you look a couple lines below that, if you look at the put call open interest ratio, it's sitting at a 1.31. So this is telling us that despite the growth that we saw today, traders are aggressively buying the downside protection to hedge against these macro headwinds that we're seeing in the market right now. Maybe even to hedge against a little bit of the growth, the 16% growth that we saw this week, expecting we could see some volatility tomorrow. We actually saw the expected move. It jumped. At the end of the market, it was about 3%. It jumped to about 6%. We right now have an expected move tomorrow to be we'll call it $60 overall. It's $59.46. If you look right across from that, you see the expected range. We could see Micron go from $930 tomorrow up to $1,050. That's what the market is expecting right now. But the last thing I'll call out, if you look at just below the put call ratio, today's volume, you see it was 664,000 contracts below the average 30-day. So it was a light trading day today. It was a light trading day yesterday on the market as well. It is July after all. We do see some lightness in this month. But this overall, it tells us that the traders are skewing towards protecting their gains tomorrow while keeping an eye on the broader market volatility. So that's what we have for green. Let's jump over and talk a little bit about the yellow signals that we saw in the market. The biggest one I'll call yellow. You may say it's green as well. Tesla called out Micron yesterday in their earnings. Let me explain to you why I'm listing it as yellow, but I love seeing this story. Tesla named TSMC, Samsung, and Micron as key partners for the Optimus robot scale-up. So as I scroll down, Tesla, they're building a new supply chain from scratch to support the Optimus humanoid robot program. And Musk called out TSMC, Samsung, and Micron as critical partners during the company's during their earnings yesterday. The other piece is on memory. Musk signaled out Micron by name on the earnings call, thanking the company for reserving a very significant allocation of reasonable terms for Tesla. He acknowledged, it was an acknowledgement, essentially, as the article says, of how tight memory supply has become amid the surging AI demand. So this was the first time that I can remember, you guys may have seen, it's the first time I've seen Tesla publicly acknowledge that securing memory supply has become strategically important enough to discuss on an earnings. So Tesla's move here, as I mentioned, they're building a new supply chain for the robot, but they also, they need long-term, they may be looking for a long-term agreement like Ford, like GPM, just to lock up supply. And this is part of the reason I have it as yellow. I would love to see Tesla and Micron just develop a partnership together, sign a long-time agreement like we've seen with some of the other automakers. I think that would have a significantly bullish shift on our thesis if we can see that. I think it is a great sign that they are listing them by name to be a partner for them as they build it out. But I just wanted to see a little bit more overall. But again, it does show us that cars and humanoid robots, you know, they transform into memory-hungry supercomputers requiring hundreds of gigabytes or even terabytes of validated DRAM and NAND, securing a volume floor for Micron. However, this tight environment is creating real friction on the consumer side. And that takes me to my next yellow signal, because what we're seeing right now, you see in the article here in Tom's Hardware that AI memory shortages increasing the price of cars. GM warns the vast cost increase, warns of cost increase, and BYD in China hikes driver assistant prices 20%. GM's chief financial officer, Paul Jacobson, he said on the earnings call that GM expects its cost to increase by $1.5 to $2 billion, mostly driven by the increasing cost of vehicle components, including DRAM. Micron, interestingly enough, they said earlier that in 2023 that the average vehicle used 90 gigabytes of DRAM and NAND. Now they're expecting these vehicles they've jumped 278 gigabytes by 2026, with high-end models requiring up to 2 terabytes. And as we know, as this was the last paragraph here mentions, that as AI assistants start becoming available on cars, these systems will require at a minimum 256 gigabytes of memory. In fact, Micron predicts that cars with level 4 autonomy will need at least 300 gigabytes of RAM, as they are essentially supercomputer on wheels. So that is a yellow sign for me, because it just shows the opportunity that we have with memory moving forward, but it also shows the increasing amount of customer friction that may be out there when we're seeing other type of consumer products move because of memory costs, like smartphones and PCs. And now if it moves over into the automotive sector and we're seeing cars get priced higher, we have an opportunity. It could push, you know, just public sentiment to the brink. They could get a level of frustration, and it could cause some type of shift, whether that's legislative shift or some other shift in the market that could help solve this. It could be competitive, but it's something for us to keep our eye on just to see how it shifts the thesis overall. And then finally, I want to jump. There's a couple red signals today that I want to cover. The first one is all around the cost of oil. I mentioned the macro headwinds in the beginning. We're starting to see oil creep up again. It got up over to $100 a barrel. Like you said, first time, I think, since May that it got up over $100 a barrel. As this Iran conflict drags on, we're starting to see some impact, not only on oil, but it's starting to creep up the treasury yields again. So the 10-year treasury yield is at 4.7%, and it's reigniting concerns about major inflationary fears. And that is causing concerns in other areas. This was an article that popped on MarketWatch. It's something I talked about yesterday, but it's just rising cost of capital for companies is starting to spook the market. This is all driven by Google's negative free cash flow of $5.9 billion. The first time in the company history they had a negative free cash flow. Let's see what the hyperscalers look like next week as well, the rest of them. If we're starting to see this continuous negative free cash flow, I feel it could bubble up to a bigger and bigger story. But there was a graph here I had to show you guys. Look at this hyperscalers getting hammered on Thursday. Look at the green line of the S&P and look at the Mag 7. Just the impact. Obviously, it's driven a lot by Google. I think Google, if my memory serves me correctly, was down by 7% or so today. It's all because the negative free cash flow, but also they mentioned they're raising their CapEx this year to $205 billion, above the high end before that they called, which was $190 billion. So this article, this paragraph I've highlighted here is that hyperscalers have been financing the data center race increasingly with borrowed money and some stock issuance rather than simply cash on hand. So global AI-related debt issuance across corporate bonds and leveraged loans was already nearing $500 billion this year, according to Goldman Sachs. That's something to definitely keep our mind on, because higher interest rates mean that every borrowed dollar to build these facilities and acquire hardware is getting significantly more expensive for the hyperscalers. So that is a red signal for me. And then the last red signal I want to call out is just the public outcry. We saw this article in Tom's today. We know over last weekend we had a bunch of protests across the country. We had 142 AI data center protests staged in 42 states as public opposition increases against the data center build out. So scroll down, you see here this stat: 70% of Americans now oppose data centers, which has resulted in bipartisan moves to block these projects. In fact, we saw these protests, 142 different ones across 42 states. This was an interesting piece. It says data centers have faced a lot of shortages in the past. GPU shortages, memory chip shortages, electricity shortages, but what they didn't expect or what they weren't counting on was a lack of public support. We're seeing that more than 69 jurisdictions have now imposed data center bans. Seattle, the home of tech giants, and the New York as well that we covered in the channel, they have a one-year moratorium. Guys, this has cost right now more than $130 billion worth of data centers. More than $130 billion worth of data centers have been delayed in just the first quarter of this year. So this significantly slows down progress for the build out overall as well. Will it impact our ability to win the AI race against China? And will the public outcry shift? Will we start to see a shift overall? Because right now, community consent and permitting timelines are becoming an even tighter bottleneck for hyperscalers than chip availability. It's presenting a real risk to the speed of downstream hardware deployment, particularly as we head towards the end of the year. And this is definitely a red signal for the memory sector. So let's recap what we talked about. Market signal scorecard across the board. Green signals, I'm giving it a score of 9.5 out of 10. We had the Intel blowout, strong earnings, strong confirmation, particularly on their data center AI segment. We're seeing this AMD's memory-centric roadmap across those products that we discussed. And we're also going to see some massive earnings next week. It's speculated that SK Hynix they're going to hit margins that are up to 77%, which is significantly bigger for them than they've had historically. 50% of their revenue could be tied up in long-term agreements. And we're seeing TrendForce and others, they're mentioning the sequential growth we'll see with DRAM. Yellow signals are those automakers looking for supply. So obviously the Tesla is a strong kind of yellow, greenish signal. But I think we're going to see more and more automakers try to lock up supply based on memory shortages that we see. And the cost of inflation, I'm worried a little bit about the consumer friction there, particularly as it starts to spill over from PCs, from smartphones into auto. What will that cause? Will we start to see some heightened concerns that get to the level of legislative change? I hope not, but it's something for us to keep our eye on. And then finally, the red signals, it is the macro pressures that we're seeing in the market and the data center frictions. Will that slow down build out? What type of impact will that have on the memory makers moving forward? Across the board, though, today was still a bullish day for me. It wasn't definitively bullish, like we said the other day, but it was a great day for the sector. We saw strong growth across all four. Let's see what we look like tomorrow at the opening bell. Let's see if we can carry some positive momentum into the end of the week. Up 16% for Micron. I will take it so far, but let's see if we can build some more. Guys, I hope you enjoyed the video. Have a great night, and I'll see you soon.